Hello all, welcome to another technical analysis video on this channel. So in this video, I'll try to explain the monthly contracts of the, taking Nifty futures as an example, how the monthly contract, spans out with respect to one reference point, that is the opening price, right? So the opening price, as we know, is very basic in any candlestick charting. Like for example, if I take an example of this being a particular candle, so this is the opening price. Assume that this is a green candle. This is the closing price, this is the low, and this is the high. So what this candle essentially is trying to tell is that the price, the market opened at this particular price, then it went lower, right? And then the buyers took it up at a very high, and then the price expanded, and then this is the high point it reached, and it closed somewhere over here, right? So this is the psychology which this candle is trying to tell. What this essentially means is that the price below the open, we are seeing some kind of accumulation, right? So this is the zone where the accumulation takes place. This is where the price expands post accumulation, some kind of aggressive buying to push off the prices. This is the expansion phase, and this is the final phase where you can say some kind of profit booking is coming, and the price closed towards the end. So using this psychology, how you can get to know the monthly sentiment of the overall monthly contract, which is because Nifty futures, essentially, if you see, we have the FNO market running, and the futures contract runs on a monthly cycle. Starting from the last Thursday, the cycle ends, and next day post, the last Thursday till the next last Thursday of this next month, we have this cycle running. So how can you analyze the price with respect to the monthly contract with respect to the opening price? That's what is the agenda of this quick video. We'll try to take examples of past 1 year and try to see how the how this particular information of keeping the opening price as a reference can give some crucial insights to the market behavior, and basically to understand the psychology of this chart. So moving forward, this is the monthly chart of Nifty. So to understand this, we have to go for a lower time frame, something of an early time frame, or even lower if you want to understand. So for this video, I'll try to. It's not about the time frame; it's about how you're seeing the overall monthly perspective. So let me go back in time. For example, let me take from past 1 year. Like for example, April. You can see that it was March 31st is the last. March 30th was the last Thursday, and the contract starts from 31st of March 2023, right? So in trading view, you have this symbol. I think you can see this symbol over here on trading view. This symbol actually tells that the futures contract, since is a futures chart, so tells that this contract has started from this particular day, and it has ended somewhere here, or it shows from a start to next start. We can somehow conclude that this is where the monthly contract is starting and ending, right? So we don't have to look at the calendar also. So what I'm trying to explain in this video is that you have to know the opening price. So just have a reference point. So this reference becomes the opening price, right? The first day immediately when the contract started, and this should be the reference point for the entire month. So where the price is with respect to the opening price gives the sentiment of that particular month in play. So for example, if you see here that this is the month in focus, right? For example, this was April 2023. This was the entire month we are talking about, this particular frame of reference. So this is the opening price, and if you want, you can also anchor anchored VWAP from this particular point to understand just how the price is behaving. So what I'm trying to tell is, well, till the price is above the opening price, right? So it clearly shows that there's some kind of buying which is taking place. If the price is below the opening price, we can come to a conclusion that it is some kind of selling with respect to the opening price. That gives a clear bias. So in this context, this is the example of April 2023, where we can see that from the opening, the price took off. There was some kind of buying from the opening itself, and that's what you can conclude from this. There's the opening, and you can see partially here that the accumulation started from the previous month itself. But let us keep a frame of reference and just continue to discuss the same. So the buying happened, and you can see post every rally, you can see some kind of retracement and price again rallied. So again, the price with respect to this month is closing towards the highs, right? So it shows that there was clear accumulation in this particular month. Buying happened in this month, and you can see that the monthly candle for this month would somewhere appear like there's some kind of a green candle, some kind of bullish candle you can see, because the opening price and the price is closing somewhere towards the highs. So this is with respect to this month. So from this we'll get a clear bias that yes, this month you have to be particularly playing on a bullish place if you have to take certain trades in that context. And one thing this is also helpful is, for example, from the opening price, if the price has traveled very far off, right? You can see here that from this particular point, the price has traveled very far off, and it is also very far off from the anchored volume VWAP. So you can tell that at this particular zone, since the price is very far off from the opening price, buying at this particular highs is not very prudent strategy, right? You since you have a reference point fixed, you come to know that yes, your probable zone of accumulation should be somewhere close to the opening price, or somewhere close to the frame of reference, that is the volume anchored price, or somewhere on the supply demand which you can mark. But since the price is very far off from the opening price, you cannot buy at this particular zone. That becomes a crucial information which you can definitely have as a reference and take prudent trading decisions accordingly. So let's move on for the next particular month to understand it further. So I'll just remove this drawing. So moving forward, okay, next we're going for the April series. So again, do the same exercise. Mark out the opening price. This becomes the opening price of the a May series, and then you just take the frame of reference to mark the so this becomes the reference point for this particular month, right? So you can see that we're talking about this particular month. So now what is this clearly telling? This is clearly telling that yes, the price is above the price is above the opening price. The entire month the price is above the opening price, and whenever the price comes closer towards the opening, and with respect to the volume VWAP, you can get a good buying opportunities in the month. So the bias is fixed for the month, and somewhere you will get to know that if the price is very far off from the buying point, it means that too much buying has happened. So from somewhere at the highs, it's not very prudent to buy. So that's where you can look for some kind of mean reversion trades at this context. When you spot any bearish price action, something like this, you can see a clear bullish, a bearish engulfing here. So that can be a particular short trades, kind of mean reversion trades which you can plan towards the equilibrium, that is the anchor VWAP, or sometimes even towards the opening price also. So that's how the reversion also can be planned, and knowing the reference. But you should not be too bearish till the price is above the opening price. Once it is above the opening price, it's clearly a bullish bias for the entire month. So that's how for this week, for this month, entire month we're talking about, right? It's not just a day, just about the entire month where the price is positioned with respect to the opening price for the month. That gives a clue on the sentiment. If you're somewhere here, should be very cautious on buying, but somewhere here you can probably buy, because buying from here has a good risk reward, because we already have a bullish buy or something like that. So let's move forward and going to the next month. Again, do the same exercise and you'll see how simply price gives reveals itself. So this is the talking about for the June series, right? So this was Friday 26th May. So for the June series, and again drop in another anchor. So this becomes our reference, right? So now this is the month we are just looking for. So you can see here that for this particular month also it's the same thing. Price is all above. It is above the opening price. So your bias has to be to buy. So where would you buy? Buy closer to the reference point, which is the opening price, or some kind of lower swings towards the anchored thing. And then when it is very far off, you should not look to buy, right? That's where you kind of look for profit booking or reversion, mean reversion kind of trades, right? So, and you can see here that, and towards the closing of the expiry, if you observe something like this, that the price more or less was pretty much positive to sideways towards the month, and it closed towards the highs, right, at the end of the month, right? Usually at the end of the month we see some kind of profit booking, but in this case the price closed towards the highs of the month, so it clearly means that some longs have been rolled over to the next month, and the price would continue to go higher in the next month. So those are also some clues which the price easily throws at us. So again, going forward to the next month, right? So this was June. Now we're moving for July. So just mark the opening price for the July, right? You can see here that is the opening price, and then you mark the anchor. So this is how now this becomes the frame of reference. Just observe. Yeah. So now this is very clear that price is above the opening price, so the bias has to be bullish. But now it is like this month, as you can see, was very much bullish. It was, you can observe from the slope also that the price is very trending on the high side with very minimal retracements and pullbacks. So whenever it gives a pullback, that's a buying opportunity. That's how you conclude at it. And when it's very far off, right, when it's gone very far off, you should not become very aggressive at buying it, right? So the more higher it goes from the opening price, the should become less aggressive, considering the context that even in the previous month also price closed towards the highs. So you can naturally expect some kind of profit booking towards the end part of the month, right? You can see that from the second half of the month, you see from the 21st or something towards the end, you can see that there's some kind of profit booking, right? Because we could see that from the past 2 months, this was the trend going on. So some kind of profit booking, and price reverts towards the mean, some kind of equilibrium, which is the anchored VWAP for that particular month or the opening price, right? So this is for this particular thing. So next, moving on towards the next month, right, which is August 2023. So here you just do the same exercise, mark the opening price as a reference. Now we're getting a different example on the opposite side. You can see that here the price is just let me mark the reference. So this is the reference for the, this is the month, right? So this is the entire month. Now, as you can see that the price is kind of sloping on the downside. So again, as I mentioned, above the opening price, it's a long bias, and now its price is below the opening price, so it's a short bias. So it kind of becomes a sell on rise context for the month, right? So this is how the price clearly spells out itself by this was some kind of accumulation of shorts, you can say, for that particular series. And then as and when price goes farther, here you cannot short because the risk reward to short at this particular point is very low. So some kind of pullback and then another short, right? So like this the month kept, and far off from the opening price, you get a good reversion trade, right? So this is how you plan the mean reversion trades reverse way, and then from here again you can plan the short trades in the direction of the uh, the month, right? So this is how, again, from the opening price, it's very clear of the how you can plan the trades for the month. So moving on to the next month, which is I think September. Yeah, September series. I think this will get another good example of a different kind of month. So you can see that this is the opening price for, and you can anchor the, and just these are the two reference levels which have to be on the chart for the entire month, right? So you don't have to do anything. Just mark one opening price line and then allow the anchor to play out. So here you can see that it's a different, okay, I not say a different case, but it's the same extension of the same thing. The price, in the first half of the month, it trended a lot. As you can see, price, trended on the upside in the first half of the month a lot. And then post reaching a particular high point, you can see that the price starts to reverse. Now here, you can particularly be very, you can play dual trades. Like for example, here you can see that the price, although is above the opening, but after it reaches a very extreme of aggressive buying, it started to show some bearish behavior, and you can see some bearish price action also. you can start looking for mean reversion trades in the second half of the month, probably targeting towards the equilibrium. And once the price goes below the AVWAP also for that particular series, it's it becomes clearly sell on rise here till it is above the opening price. But the overall bias remains such that this month was a volatile month, right? The price reached upside and then came downside. So this is how also in the month we can have two halves, a bullish month and a bearish month, and that price itself is trying to confirm, right? So again, price in this month it opened here and it closed somewhere towards the open, so some kind of a flat series, you can just think of it like that. And then yeah, moving on to the next, removing the drawings and moving on to the next month, which is October series. So October, you can see that the price opened somewhere here. Sorry, this is not. Yeah, this was the thing. It is October, September 29th is the opening for the October series, and then you mark off the anchor for that particular month. Yeah, here you can see that this is a particular series where just so you can see here that price spent a lot of time towards the open. I mean, it was not able to convincingly take any direction with respect to the open. So it was just doing this crisscross towards the opening price. And then once the price took off eventually, which was towards the end of the month, right? So you get a clean short trades because we know that the price is above the opening price is bullish, and if it's below the opening price, it's bearish, right? So now ultimately the price eventually took off on the lower side, and that's when you get good uh, bearish trades in such a context. So, and one thing what you can be very clear is, see, price flipped the direction twice here, right? The price first came below the open, again it went above, and it hit a high here. And second time when the price attempted, it was not able to cross the highs. So it's a simple price principle that if it is not able to move in one direction, it will move in another direction, right? So that's why the price eventually, after once it broke these particular point, it has already changed this direction twice, right? Because once it came down, again it went up, and now it's coming down. So this was becoming the final direction, and that would be the direction for that particular month. And with this information somewhere here, right, when you're looking at it on the 19th or last part of the month, you can be sure that either the bias is definitely not going to be bullish because the price is below the opening price. Will be either having a bearish bias or somewhere a sideways bias till the previous swings, right? So once this is also taken out, it becomes very, very bearish for that particular series. So this is how, with respect to swing points, also you get to know uh, where the price is heading and what it is actually trying to do. So this was for I think October. Let's move on to the next month, November. So in the November series, you can see that just again anchor it to the opening price, right? And then have a moving anchor. So here again, this is a clear case of a constantly trending month. You can see here that this is the reference point. So here price is simply above the opening price, right? It is above the opening price, and it's also above the moving anchor. So clear cut buying which is taking place, and price is constantly moving up with it is moving up with good retracements, right? It's not like it's continuously moving up in a parabolic way and then it does like this, right? This shows that there is a healthy higher highs higher low formation. So this is a good uptrend scenario. So this is such uptrends generally sustain. That's what I'm trying to convey from the price perspective also. And it closed at the highs. Again, we are seeing the second example where the price from the open it is close towards the highs. It means that in the next month also there will be some kind of rollover and the price is constantly heading towards the highs. So such repetition of price behaviors we can clearly observe. So it's very bullish. Next, we'll move to the next a particular month, which is December. Yeah, so December series, you can see that December series started on the first December itself. It was opening day of the contract, and then you can anchor the price somewhere here. You can see that uh, from this reference, this is the entire month, right? So again, the past month also was bullish. There was a rollover. There is prices again heading higher. You have a bullish bias to play out because the price is above the opening price and constantly moving in a healthy, taking healthy retracements. It's moving up. So such points become good, buy points. And then when the price reaches too far off, right? When you know that it has traveled too much, right? So here you can become very cautious on going longs, right? So till until the price is not able to convincingly take out the previous highs, there's no point in aggressively going long, and you can start looking for kind of mean reversion trades. And again, when the price is started to take support and confirming through such bullish candles, you can again look back to plan the bullish. So again, here also the price back to back 2 consecutive months, you can see that it played out in a bullish way. So I hope you're able to understand this uh, concept. So next, moving forward to the next month, which is I think the January 24 series. So here the price is opening price of the thing, and you can somehow do the anchor here. And this becomes the frame of reference for the entire month. You can see here that this is the so here again keeping it simple with respect to the opening price, where the if price is below the opening price, it's we're looking for short trades, and if it is above, we're looking for long trades. So for example, here you can see that at one particular instant, price goes above the opening price. So here the next following day also it gave a bullish price, but then started to not able to sustain. That's what you have to constantly apply. I mean, look at the candles also here. This price action is very weak price action, suggesting that the buying is not strong above the opening price. Some kind of distribution or the selling context, not clear buying indicated by simple candlestick also. And once price goes below, it becomes a clear sell on rise context, and it takes sell on rise trades. And but the only thing is, again, if it is far off from the opening price, somewhere here, the risk reward to short will not be so good. So look for reversion trades. Again, this becomes a frame of reference, and you can plan for short trades. So this is how in such, but I would not say this is a big range. This is also a very small range, and you can see that the previous swing points also give reference to the support to the price as it goes towards the end of the month, right? So this is for the Jan 24 series, and then moving forward to the Feb series, right? So this is the opening price. Again, have an anchor for the opening price from the opening price. So this becomes the reference for this entire month. You can see that this is how. So here again, it's very simple. The price is above the opening price. I mean, for the entire, so for the most part of the month, the price is above the opening price, but it's not able to travel, far off from the opening price. It suggests that not much conviction to, buy at this particular point. But still, there is some. There's not even a selling pressure. So that's why price is held above the opening price, and whenever it goes far off, you can see some profit booking coming up. So this shows that it's not a trending month. It will not probably be a trending month. It's kind of a sideways month, and then whenever it goes towards the top, you can see profit booking or some kind of mean reversion. So overall closing somewhere near the open itself, right? So price somewhere closed here. So not a great trending month, but knowing the bias, knowing the location within this space, if it is far off, look for reversion. If it is near off, look for a buying trades. Such trades can be planned with such a simple approach is what I'm trying to convey. And then moving forward to the, I think this is the last immediate month. So here again, you can see that this is the opening price, and this becomes the anchor for this, right? And here you can see the uh, for a particular period, price also went below. You can see that the price has done dual behavior here. This is very obvious because the previous month also was sideways, indecisive. Here also the price tried to go higher, but is not able to convincingly cross previous swings. You can see this was a swing, and price not able to convincingly cross it. So it again tries to mean revert. And once the price went below also, that also tries to give a bearish bias for a moment. But since the previous months, swing points are here, the price is trying to take support from there itself. So again, a very indecisive month, you can say, but it's not below it. You can see you can plan for bearish trades, and then far off from it, again, you can plan for mean reversion trades based on the price behavior which is unfolding, right? So maybe a candlestick psychology related should be simple to read, but maybe in future videos I'll try to explain on the candlestick psychology. But this is how, with respect to simple opening price, you'll be able to understand the psychology of the big players, how they're planning the entire month, and how you can position yourself with respect to the opening price. If it's very far off from the opening price, probably be very caution on buying and look for mean reversion kind of trades. Same appears on the another side also. If it's very low with respect to opening price, you can better off taking mean reversion trades than shorting at a particular point of time. Again, depends on the overall scheme of things, whether it's a trending month on the upside or trending month on the downside, which the price itself will easily convey if you are having a particular reference point to choose, and that reference is the uh, the opening price itself is what I'm trying to convey. So hope this video somehow helpful to understand the overall scheme of things from the monthly contracts uh, with respect to the opening price. So just observe this and do let me know if there's any suggestions on this. Basically, there's a lens to see the opening market from the opening price perspective for the entire month, and accordingly prudently plan the trades, either swing or intraday with such biases. So that's it for this video. Thank you.